Toyota is a company that is known for making very good cars, and the stock has performed relatively well for a car company. So let's look into it and see if it's maybe a buy. Now, one thing is important to know, these numbers are gonna be in Japanese yen. Yen-wise, they have been able to keep revenues growing while doing continuous share buybacks. Most legacy car companies only do share buybacks in some time and then issue new ones. An example would be GM. Yes, they do share buybacks, but when times get tough, then they issue new shares. So it's great to know that Toyota constantly buys back shares. It is a sign of strength, and Toyota doesn't only own the Toyota brand, it owns some other companies. Most of them produce stuff for cars, but they also have some other brands like Hino Motors, Daihatsu Motor, and also very strange Toyota Housing Corporation. They build houses. So I guess Toyota's a bit bigger. I mean, they have been around since a very long time, but their main business, of course, comes from the Toyota brand. And here they get revenues in two ways. Sales of product, which is the money they make when they sell a car, and financial services, which is stuff like financing. And we can see already, despite financing making up a very small amount of revenue compared to sales of products, when we look at gross profit on cars is around 2 billion. On financial services, 300 million. So despite making up a tiny amount of revenue, they make up a decent amount of profits. And I'm actually amazed they keep these margins up, because financing has been very difficult. Not a lot of people are able to finance cars, and if they do, they may have extremely high payments. It is important to look at combustion engine versus AV. Here Toyota is a bit special. While electrified vehicles make up 35% of their sales, they actually do not produce a lot of electric vehicles. Only 59,000 are battery-only vehicles. Toyota is going heavily on hybrids. They say that is the future. I think they're kind of lying there. They're just hoping it's gonna turn out like that, because they don't want to compete with all of these other new companies there, like BYD, like Tesla, like NIO. The legacy car makers have the issue that they do not have an advantage when it comes to EVs, and that is why they're getting crushed there. And for companies like Toyota and Volkswagen, which have this high market share, which they will lose in the EV market, they will not have it as high as before. This is very important. So I think they're going into hybrids, hoping that it will be the future and that they will have a dominant position there. Could that be a very pessimistic view of mine? Maybe. But if you think about it, all the governments are going after combustion vehicles. Even if you think that's bad, it is gonna affect them. So I don't think hybrids are the way to go. I think Toyota's digging themselves a hole there. The longer they just miss the EV transformation, the more behind they will fall. But that is just an opinion of mine. Maybe you think hybrids are gonna work out. We will have to see. I also don't think they can even compete when it comes to EVs. They have a massive amount of debt. This is 100 billion US dollars net debt, and that has been growing since 2018. So even if they would want to invest in EVs, they can't do that heavily. So I think the hybrids are a one-way route. Either it's gonna work out or the company's gonna get crushed. Now, one positive thing about this debt is that it is in yen, and currently the yen is on a permanent decline. Their sales are mostly in US dollars, euros, because they're so international. So if the yen goes down, their debt compared to their revenue is gonna go down as well. So this 100 billion in debt is not as dangerous as I think it looks. But the yen situation also affects their revenue. While it maybe looks like revenue is growing very fast, if you take the yen from 2013, it has declined by 30% since then. So if we take this 41 trillion, multiply it by 0.7 to get to the new value, it is around 30 billion yen. So that is not a lot of growth in 10 years. It is a legacy car maker. They're already very big. And at the same time, free cash flow has really not moved despite the decline in yen. So free cash flow overall has actually declined. But despite the decline in free cash flow over time, the stock just keeps going higher and higher. It's now trading at a 30 times free cash flow multiple. And I think this is just an effect of the broken monetary policy in Japan. If you remember, Berkshire bought a lot of Japanese stocks, and manga said why. They were able to borrow yen at 0.5% interest and invest in stocks paying a 5% dividend yield. That is free money, and that is the monetary situation in Japan, and that is why the yen is on a constant decline. They're just printing money forever. So while for Buffett, it was a good idea to buy Japanese stocks because it was basically free money. Even if the yen goes to zero, he borrowed in yen, he gets money in yen, he can pay off the debt in yen. But for us as ordinary people, we do not have the ability to borrow yen at 0.5%. I'm looking at the stock already, and I think this is overpriced. But let's look at the numbers. I'm assuming very, very extraordinary growth amounts, because otherwise this stock just doesn't make sense. Even without keeping the yen decline in mind, Since 2013, free cash flow has declined. If you factor in the yen decline, it has declined very fast. It currently makes $6 in free cash flow per share. If we assume the yen is gonna stop declining and they're gonna grow free cash flow again by 5% and then 4%, these are extraordinary numbers for this company. And this factors in that they would do that while focusing on hybrids, which are in a decline. Even if we assume a free cash flow payout ratio of 75% with a little deduction due to taxes. 10 multiple, it is a car stock. Every other car company is trading at 10, 15, 12. We would come to intrinsic value of $68 per share. Currently it's trading at 190. I think you can see that it doesn't make sense. Now what if we assume it gets a bit better? 8% growth, 6% after that, and a 15 multiple. Even then, $104 a share. That is still a 50% downside nearly. And now what if it goes bad? 1% free cash flow growth and an 8 multiple, $48 per share. On a US dollar basis, the company has been shrinking by 2 to 3% per year. If we factor in those minus 2%, even with a 10 multiple, the stock is only worth $43. So for me, these Japanese stocks are not worth investing in unless you can borrow in Japanese yen. And this is just the insanity of zero and negative interest rates. This is why I'm so happy that we in Europe and the US are finally leaving the cycle of negative and zero interest rates. If you invest in Toyota, please tell me why. Maybe I'm missing something. Maybe I'm generally just missing something. Maybe some Japanese stocks are better. There are always great companies, but Toyota is not one of those. It is just a phenomenon of zero interest rates, and it is not on my buy. I will not have it on my watch list. The company doesn't have a good future for me with hybrids, plus the numbers just don't make sense. So what do you think? Write it down below. Thank you, have a good day.